I struggled with finding the direction of the market until I found what I'm about to show you in this video. It took me from being right with direction 70% of the time into 87%, which is a 30% increase. And maybe you're struggling right now. You're bearish when you should be bullish and you're bullish when you should be bearish. Or worse, you get the direction right, but the market taps you out before it goes in the direction that you've always forecasted. So in this video, I'm going to show you the secret to daily bias and how I was able to become profitable using just this strategy and how I use it day by day, just with 3 steps so even a beginner couldn't mess it up. As traders, we look at the daily bias in a very simple way. We see what the market is choosing to respect and we pick our bias based on it. That is how you would have been bearish on this specific day. And this is a very important step, so here's how to master that first. There are only 2 steps in identifying the daily bias. One of them is identifying the key levels that are closest to price. And the second one is asking yourself, what are the levels that the market is choosing to respect? So we are going to identify all of the key levels first. So you have this bullish daily order block. We have this bullish order block, and we are at a bearish order block right now. Yet, when you ask yourself the question, what is the market choosing to respect? You can see that the market not only reacted out of 1, but 2 bullish order blocks. And not only that, it pretty much engulfed the bearish candle as it reversed more than 50% of the bearish candle. So given that, the answer to the question of what is the market choosing to respect is going to be bullish key levels. So therefore, your daily bias would be bullish. And this is where we can see the breakout higher. And now you ask yourself the same questions. You identify the key levels, but now there's less things stopping the market. So you can mark out this bearish extreme, but you can see that the market is still choosing to respect bullishness. And then the market goes towards that extreme and reacts bearish off of it, but we've now created a bullish fair value gap. And yes, we're starting to have a lot of levels on our charts. This is why I like to reduce the clutter on my charts as much as possible, because the market is not coming here anytime soon. And so I would remove all of these and just keep the most recent ones and ask yourselves the question, what is the market choosing to respect? And for now, it's still bullishness. We come towards the fair value gap and we move higher. Ask yourselves the question again, what is the market choosing to respect? And it's still bullish. So it's very clear that we're going to go towards this swing high, which would keep our daily bias as being bullish. The same thing happens when you're bearish. You ask yourself the question, what is the market choosing to respect? And notice how we have this massive bullish order block and also this massive bullish order block. Both of these have already tried to give the market a strong move higher. Well, you can see it through this wick and you can see it through this wick and this bullish candle. But directly after, the market has fully rejected the move. And here, the market has fully rejected the move. So that means that the market is choosing to not respect bullish key levels. And now this is where the secret is going to come in. But there's a big problem with this way of looking at the direction of the market. And I'm going to show you exactly how to fix it and a strategy for you to implement right after this video. And yes, this is the strategy that I use every single day on my funded accounts with FundedNix, which you can check out with the first link in the description and use code Kimmel to always get the best discount code. Because here's the problem with this method. It's amazing 80% of the times, but it's too slow on the other 20% of the times. So this small detail has changed everything. When we're trying to predict the direction of the daily chart, we're trying to predict what 23 hours are going to do from 6 p.m. Eastern time into 4 p.m. Eastern time. But when we're trading, this is the daily chart, yet we're only focusing on 2 to 3 hours of price action. So why are we trying to predict what the next 23 hours are going to do when you can simply forecast what those 2 to 3 hours are going to do? This is what I call the session bias. Instead of trying to predict what the market is going to do for the whole day, you just try to predict what it's going to do between 9:30 a.m. Eastern time and 12 p.m. Eastern time. What do you think is easier for us traders to do? Be right for the full day or be right for a tiny subsection of the day. And the secret to doing this is by using the 4-hour chart. Because now, if we go back to this chart and you say, Kimmel, right here, we are still at the bullish key levels and we are respecting those bullish key levels. If we just go to the 4-hour chart, you can already see how we're constantly failing to create higher highs and we keep on breaking lower. And that would turn you bearish, which would increase your directional strike rate. You would be right on direction because even though the daily chart is showing you that it's respecting those bullish key levels, the 4-hour chart is telling you another story and you would be bearish. So you would be bearish, the market would turn all the way down, but this is not everything. Let me show you how this would allow you to also catch the bottom of the market. Right here, if we are identifying where the market is reacting from, we would be able to identify the extreme order block before the swing low. Now, let's go to the session open to 9 a.m. Eastern Standard Time and identify what the 4-hour is doing. Can you see how the 4-hour has now fully given us a V-shaped reversal? It has engulfed this bearish candle. And now the next obvious target is going to be this order block on the 4-hour chart. So now what you can do is you can trade from this bullish key level towards the bearish one, which would in turn give you a profitable trade, a trade that you wouldn't have taken if you were looking just at the daily chart. Now, let me give you the strategy to execute on this right now. The entry model is very simple. We're going to trade in line with the session bias. So we're going to look at the 4-hour chart at 9 a.m. Eastern Standard Time. We are going to identify the key levels on the 15-minute chart. We're going to wait for 9:30 a.m. manipulation to that key level. And we're going to wait for the 5-minute engulfing. So all we're going to need is the 4-hour chart, the 15-minute key levels, and the 5-minute engulfing. All the rest is just waiting. But theory is easy. Let me show you exactly how we apply this on the charts. So let's start off with the market open. First, we identify the direction of the 4-hour chart. We can see that the market recently not only has reversed out of the extreme, but it has also engulfed the market trying to move lower. So our session bias is bullish. When we go into the 15-minute chart, let's go to 9:15 a.m. Eastern Standard Time to identify the key levels. So this is 9:15 a.m. Eastern Standard Time. Our job right now is to identify the key levels. So we have the order block that the market reacted from. Now we have this move lower that the market has also engulfed. This is basic market structure, right? You can see the market is forming higher highs, higher lows, higher highs. Now you expect a higher low and then a higher high. So now on this leg, you are looking for the higher time frame key levels. And all you can see mainly is going to be this bigger order block and this smaller order block. Now we go to the 5-minute and we wait for the market to open. Now we have the market open. We are already at the first order block, so this manipulation does not count. So what we're looking for right now is the market to come back to the next higher time frame key level and give us the 5-minute engulfing. So we have the market reaching to the 15-minute order block, engulfing the most recent candle. So we're going to set our trades with the stop below the low and a take profit at a 1 to 2 risk to reward. And now we just let the trade play out. It's still hanging around break even. Once we break out, you can manage below the most recent low. We're pretty much removing risk. And then you just let it go to the final take profit, which gives us a total of $3,000 in this first position, or a 1 to 2 risk to reward. And all we do is one trade and it's done for the day. This is not just a back test. This is the trade that I took live and I made sure to break it down on YouTube, which you can check in the top right corner right after watching this video. And I will also link it in the description. Now, next up, we have once again the 4-hour reacting from a very strong sweep and giving us that strong bullish momentum. At this point, you would think, well, we are bullish. But here's what the 4-hour reveals. The 4-hour is showing you that we are now failing to create higher highs. Not only that, we are respecting bearish order blocks. So therefore, the 4-hour is giving us a strong indication that we should not be longing, even though on the daily chart, it might seem that way. And so now we know that our session bias is going to be bearish due to the market failing to create higher highs. So our goal right now is the same thing. 9 a.m. Find out the session bias on the 4-hour chart and at 9:15 a.m. we identified the 15-minute key levels. Those are the two steps. The third step, we just wait for the entry model, which is manipulation, engulfing on the 5 minutes. So now this is 9:15, this is 15 minutes before the market open. We can already see that the market is failing to create higher highs. This is the 4-hour high that we saw failing. We have the move lower, we have the pullback towards this massive retracement, which you'll see on the 4-hour, and we are already starting to move lower. So now we look at the most recent price and we identify the most recent key levels, such as this 15-minute bearish order block, this 15-minute bearish order block, and last but not least, the most recent 15-minute bearish order block. So all you wait for now is a manipulation towards those order blocks, towards either of these order blocks, and an engulfing on the 5-minute chart. So now we have market open, we have identified our key levels. All we have to do now is wait for the entry model. So we manipulate towards the first order block. So now all we're waiting for is an engulfing. We have a very strong engulfing. We're going to have our stops above the body, and then we are going to target a 1 to 2 risk to reward. So we sell, put our stop loss above the high, or take profit at a 1 to 2 risk to reward. And then we just let the market do its thing. Then within 15 minutes reached our 1 to 2 risk to reward. Why? Because we weren't part of the traders that got manipulated. We waited for the market to manipulate and then we executed once it confirmed our session bias. This is one of the examples where before I would have been waiting for reasons too long, while right now I've been so much more precise and the session bias would have given you the shorts. But let me give you one final example. So we are on the 4-hour chart. We see that we are moving down, so our session bias would continue to be bearish. Now let's go to 9 a.m. Eastern time to identify the key levels. So this is 9:15 Eastern time. We can see that the market is coming back to this massive pullback. Once again, this is basic market structure where the market is moving lower, higher, creating a lower low, pulling back, and now you expect a further move down. I have a whole video on market structure if that is something that you're interested in. We see that we are reacting from multiple bearish order blocks, and now we want the market to manipulate towards the higher time frame key level, engulf, and then give us the move down. So this is market open. Notice how we are engulfing higher, so at this point every single trader is longing, but since we know our session bias in our 4-hour chart, we wait for the market to engulf at the higher time frame key level. We are able to execute on the shorts with the stop above the high and target a 1 to 2 risk to reward. And then we just let the market do its magic because all of the traders have already been manipulated. Now it's our turn to profit. And that gives us a 1 to 2 risk to reward. This is the exact strategy that I use on a day-to-day basis. But if you want more information on the way that I trade, then check the first link in the description where you'll get access to my mentorship, where you can see me doing daily market breakdowns and trading in front of you every single day, be it through live streams or analysis. So make sure to check the first link in the description to learn more about the way that I trade on a day-to-day basis. And once you're profitable, your next goal is going to be scaling to $10,000 per month. So I recommend you checking out this video right here. And if you want to maximize your wins, then check out FundedNext right here, which is the best prop firm right now.